Frequently used terms within the crypto space and their meanings. Accumulation. This refers to the process by which one or various traders builds a position in an asset. This usually occurs after a fall in price of the asset, during the consolidation period. Altcoins. This refers to all other cryptocurrencies besides Bitcoin. Arbitrage. This refers to a method of making profits using the price differences between exchanges. For example, if Bitcoin is trading at $60,000 on Binance and $60,200 on Coinbase, arbitraging demands that you buy Bitcoin from Binance, which is trading at $60,000, and send it to Coinbase to sell at $60,200 to make some profits. Ask and bid. A sell order is referred to as ask while a buy order is referred to as bid. ATH. This is an abbreviation that stands for all-time high, which is the highest point in price that a cryptocurrency has attained in its history. Average down. This refers to trying to lower the average entry cost of a position by slowly buying the asset at reducing rates. Bag. A position held in any crypto asset. For example, a bag of Matic simply means you are holding a position in Matic. Bag holder. This refers to someone that holds a coin/token. Bear market. This is a market where the prices are seeing a long-term downtrend as a result of a huge sell-off, leading to the creation of new lows. Bear trap. This refers to a technique used by the market makers to sell a huge amount of a crypto asset suddenly, which causes a quick dump in the price of the crypto asset. Everyone thinks that the market got bearish, and out of fear, they all rush to sell. The market makers now buy enormous amounts, which in turn pushes the price upwards, trapping those that sold off thinking a bearish market just started. Bear. A terminology given to someone who is expecting the price of a crypto asset to fall. Bearish. This is referred to as the sentiment a trader will have if he thinks a crypto asset will depreciate in price. Block. This refers to groups of data within a blockchain. Blockchain. This is a digital form of record keeping and the underlying technology behind cryptocurrencies. Bots. These are automated trading set UPS that execute trades automatically. Bull market. This is a market where the prices are seeing a continuous uptrend, leading to the creation of new highs. Bull trap. This refers to a technique used by the market makers to buy a huge amount of a crypto asset suddenly, which causes a spike in the price of the crypto asset. Everyone thinks that a breakout just happened and they all rush to buy. The market makers now sell enormous amounts, which in turn pushes the prices down, trapping those that bought thinking a breakout happened. Bull, a terminology given to someone who is expecting the price of a crypto asset to go higher. Bullish, this is referred to as the sentiment a trader will have if he thinks a crypto asset will appreciate in price. CMP, current market price. Coin, this refers to a representative store of digital value that lives on a given blockchain or cryptocurrency network. Cold wallet, this refers to a medium that facilitates the secure storage of your crypto assets completely offline. Consensus, the network for a digital currency reaches consensus when the network's nodes agree that a transaction took place. Consolidation, this is a period where price is ranging in a well-defined region. This can also be referred to as a period of indecision in the market that generally leads to a volatile movement in either direction. Correction, this refers to a fall or a drop in price after price has made a new all-time high price. Cryptocurrency, this is simply a type of currency that is digital, decentralized, and that relies on cryptography. Cryptography, this is referred to as the encoding and decoding of information so that potential observers are unable to understand the information being sent. Cryptosis, this refers to the endless desire to engulf every bit of information about cryptocurrency. dApps, this is the short form of decentralized applications, which refers to applications designed by developers and deployed on a blockchain to carry out actions without intermediaries. Day trading, this involves taking a position in the market and exiting that same day or within a 24-hour time frame. DCA, this is the short form of dollar cost averaging, which is an investing strategy where an investor invests a total sum of money in small increments over a period of time, in a crypto asset. Decentralization, this simply refers to the distribution of power away from a central point. DeFi, this is the short form of decentralized finance, which refers to financial activities that are conducted without the involvement of an intermediary like a bank, the government, or other financial institution. Demand zone, this is a zone that has huge buy orders. Distributed ledger, this is referred to as a system of recording information that is simply distributed or spread across many different devices. The blockchain, for example, is a distributed ledger that was originally created to keep track of all Bitcoin transactions. Downtrend, a downtrending market refers to a market in which price continues to make lower highs and lower lows. DPoS, This is an abbreviation that stands for Delegated Proof of Stake, which is a variation of proof of stake that uses supernodes or master nodes to validate transactions. Dump. This refers to the crash in price of a crypto asset which is triggered by massive sell-offs after an associated spread of fear, uncertainty, and doubt. Pump and dump is a tactic used by groups to manipulate the market sentiments of a crypto asset. Escrow. This refers to a third party that holds the financial resources presented for a transaction on behalf of other parties when both parties involved in the transaction may not trust each other. Exchange. A digital marketplace that facilitates the buying and selling of cryptocurrencies. Fiat currencies. These are currencies that are minted by the central bank. FOMO. This stands for fear of missing out. Common with beginners in the cryptocurrency space, they rush to enter a trade without enough research with the fear of missing out on profits. Fork. This refers to the change in protocol which is done by a blockchain's users. These changes to the protocol of a blockchain often results in two new paths, one that follows the old protocols and a new blockchain that splits off from the previous one. For example, a fork of Bitcoin resulted in Bitcoin Cash. Fractal. This is a pattern of price movement which has occurred earlier and is likely to occur again. FUD. This stands for fear, uncertainty, and doubt. This is a psychological trick used to spread doubt and fear which would cause the price of a certain crypto asset to drop. Gas. This refers to a fee that is being paid to use a service on a blockchain network. It can also be referred to as a fee paid for validating a transaction. Genesis block. This refers to the first block of a cryptocurrency ever mined. Halving. This is a feature that is written into Bitcoin's code in which after a certain number of blocks are mined, typically every 4 years, the amount of new Bitcoin entering circulation gets halved. Hash. This is a unique string of numbers and letters that identify blocks or transactions done on a blockchain. HODL. HODL is an abbreviation that stands for Hold On for Dear Life, which refers to a passive investment strategy in which people buy and hold onto a crypto asset or crypto assets instead of trading it with the hopes that it increases in value in the future. Hot wallet. This is a software-based cryptocurrency wallet that is connected to the Internet. ICO. This is an abbreviation that stands for Initial Coin Offering, which companies within the blockchain environment who are looking to raise capital will launch. The funds gotten from the ICO launch will be used to create a new coin, application, or service. KYC. This is an abbreviation that stands for Know Your Customer, which requires companies that offer the sales of crypto assets to verify the identity of their users. Leverage. This refers to the extra amount of asset bought or sold which is over your capital. For example, buying or selling $1,000 worth of BNB with a capital of $200 is said to be a leverage of 5x. Limit order. A limit order is an order to buy or sell a crypto asset at a specific price or desired price. Liquidation. This refers to the forceful closure of a trader's leveraged position due to a partial or total loss of the trader's initial margin that is needed to hold the leveraged position. This happens when the trade or position goes the opposite direction. Liquidity. This refers to the measure of how actively a crypto asset is being traded in the market. A high liquid crypto asset simply has many buyers and sellers at the same time, making it easier to buy or sell that crypto asset at any time. Long position. This is simply a buy position with leverage. You enter a long position when you expect the price of a crypto asset to rise. Margin. This refers to the amount of funds required to open a leveraged trade. Market capitalization. The market capitalization of a crypto asset is referred to as the total value of all the coins that have been mined. This can be gotten by multiplying the circulation in supply of that crypto asset by the current market price of that crypto asset. Market order. A market order is an order to buy or sell a crypto asset at the market's current best available price. Mining incentive. This refers to a reward that miners get for confirming transactions and mining them into blocks. Mining rig. This refers to a structure that houses cryptocurrency mining equipment. Mining. This is the process by which new units of a digital currency are made available and the log of transactions between users is maintained. Mooning. This refers to the soaring of a crypto asset in both price and volume. NFTs. This is the short form for non-fungible tokens, which are units of value used to represent the ownership of unique digital items like art or collectibles. No coiner. This refers to people who do not own any crypto asset. Node. This refers to a computer that connects to a blockchain network. Noob. A noob in the crypto space refers to a newbie that doesn't have a comprehensive knowledge of cryptocurrencies. OHLC. This stands for open, high, low, close. OTC. This stands for over-the-counter trade. This refers to the buying of large quantities of a crypto asset without going through the order books. P2P. This is the short form for peer-to-peer, which has to do with two users interacting directly for the purpose of engaging in a transaction without a third party involved. Pattern. A pattern or a chart pattern is a predefined shape that has been historically studied by chart analysts or technical analysts. Traders try to use these previous performance statistics to predict future price movements. For example, a head and shoulders top is considered a bearish pattern. POS. This is an abbreviation that stands for proof of stake, which is another method of confirming transactions. The digital currencies that use this approach to verification frequently provide all their digital tokens upfront, and miners are selected based on how many units they have, which is their stake. Positional trading. This trading refers to the buy and hold type of trading that involves the buying of crypto assets for the purpose of holding for a long period of time. POW. This is an abbreviation that stands for proof of work, which is a system of proving that a digital currency's transaction has been verified. Private key. This refers to an encrypted code that allows direct access to your cryptocurrency. Like your bank account password, you should never share your private key with anyone. Public key. This refers to your wallet address, which is like your bank account number. Pump and dump. This is a trick that is used by a group of people to accumulate a low-volume coin, shill it to retailers and exit it in huge profits after people have massively invested in the coin by placing pre-existing sell orders. This can also be referred to as a type of investment scheme where several people work together to inflate the price of a crypto asset so they can sell it when its value is artificially high. Pump. This refers to the skyrocketing of the price of a crypto asset. Rally. This refers to a continuous upward trend that leads to an increase in price of a crypto asset. Rekt. To suffer from losses from crypto assets that have lost their value completely. To have a destroyed portfolio. The term Rekt is a slang gotten from the word Rekt. Resistance. This is simply a level at which the price of a crypto asset tends to find supply pressure strong enough to stop or reverse its price from moving upwards in an uptrending market. ROE. This stands for return on equity. Rug pull. This refers to a malicious maneuver in the cryptocurrency industry where crypto developers abandon a project and run away with investors' funds. Sell off. This is triggered after profits are taken after a rally in price, which leads to the lowering of the price of the asset. Short position. This is simply a sell position with leverage. You enter a short position when you expect the price of a crypto asset to fall. Sideways market. This refers to a totally indecisive market that is not leading to a breakdown or a breakout. Smart contract. This is an algorithmic program that enacts the terms of a contract automatically based on its code. Spread. This is the difference between what the sellers are ready to sell at and what the buyers are ready to buy at. Stats. This is the short form for Satoshi, which is the smallest unit of Bitcoin. 1 Satoshi is equivalent to 0.00000001 BTC. Stop loss. This is an advanced order that is placed to sell a crypto asset when it reaches a price point, and it is used to limit losses either on capital or on already made profits which were gotten from trading. Supply zone. This is a zone that has huge sell orders. Support. This is simply a level at which the price of a crypto asset tends to find demand pressure strong enough to stop or reverse its price from falling further in a downtrending market. Swing trading. This trading involves taking positions in anticipation of quick market movements over a series of days or weeks. Time frame. This refers to a specified periodicity in which price action is displayed on a chart. For example, the 15 minutes time frame, the 1 hour time frame, the 1 day time frame, etc. Total supply. This is the limited number of coins/tokens that will ever exist. TPS. This is an abbreviation that stands for transaction per second, which refers to how many transactions a cryptocurrency can handle per second. Uptrend. An uptrending market refers to a market in which price continues to make higher highs and higher lows. Volatility. The quantification of the degree of uncertainty about the future price of a crypto asset, or the rate at which the price of a crypto asset increases or decreases for a given set of returns. Walls. These refers to extremely large orders, either buy orders or sell orders, which are placed at a range in the market. Whale. A trader with a very large stake compared to a retail trader. White paper. This refers to documents that are created by the developers of a certain digital asset. These documents offer comprehensive information on the digital asset as well as its underlying technology.